We've got ourselves a Bitcoin volatility surge. I told you it was coming. How not to become exit liquidity? That's a question everybody needs to know the answer to, right? Hey guys, it's Keith Allen. Hope you're having a good day. We have, we've had some crazy volatility this afternoon. And, a week ago, I showed you a couple of different technical patterns in the Bitcoin chart that indicated volatility was coming. We're certainly getting that in spades. And a lot of it has been predictable. But sometimes we get these wild moves that have not been so predictable, like what happened here in the past couple of hours, at least for me. I was caught a little bit off guard. I was well positioned, but I'm not going to lie. Things developed as I didn't necessarily see coming. I got a little fake out, and I'm going to show you exactly what happened and why I was temporarily fooled, but why it does not really change anything for me, and how I'm protecting myself from really being overexposed and becoming somebody's exit liquidity. So my goal here is to leave you with this one, is that you leave this one with some insight as to what's happening here at both the short term, in both the short term time frame and a higher time frame, more of a macro level, and most importantly, that you understand how you can protect yourself from becoming someone else's exit liquidity. And so we will look at the candle charts, and we'll look at order flow and order book dynamics to get some clues here and show you how we got some early indications of this volatility that we just saw, and both in both directions, to be honest with you. So before we climb in, as per usual, I'm going to ask you to do me a favor and smash a couple of buttons and help me grow the channel. You know how this works by now, right? The more you engage, the better for the videos, and also the better the content is, right? It's more fun for me, and the content is more valuable for you. So do us both a favor by joining me for the live chat as well. On that note, hey, Alex, good to have you back. Yeah, we've had a good start to 2026, and I'm hoping that things are going to continue to develop as forecasted, and we're going to be well positioned for what's to come. Regardless of what the overall trend is, there's still opportunities to make money in both directions here, and I'm hoping we can give you some clarity here on how you can do that and how you can protect yourself when it's all said and done. So also, one more favor before we start. I'm going to give you a couple seconds. Share the stream. Go ahead and share the feed you're watching today, and invite some friends, invite some fellow traders, if you're in a trading group, drop the link in there and invite those guys in. Live chat is open, so I love engaging with you guys. If you have questions, I'll do my best to answer them. If you have insights, by all means, please share them. And with that, we can go ahead and dive in. Like I said, last week I showed you these patterns in the charts, and let me just remind you what that is. Alex asking, how do I see the ask liquidity at 100K? Good question. I'll get to that in a second, Alex. And I'm going to leave it up here so I remind myself. So let's start on the candle chart here and show you the patterns that I have identified that clued us in that we were going to see this volatility. And so, as you can see here, we had a golden cross between the 21-day and the 50-day moving averages here. And what got a little tricky is I really expected to see things move after this, but it took longer to really develop than expected. I mean, there was a couple of days of chop here, and I was wondering if it was really going to happen. Like, was this just going to be just a very shallow cross? Because we started out and we had, I'm going to turn on the data here so we can see exactly what the difference is in, where, it was just really at the beginning about a $30 difference. And then once we crossed, it was only a $4 difference on that golden cross. the 21-day moving average was only $4 higher. That wasn't very well defined. And then the next day, it faded back, and the 50 moved back above by a few bucks. And then on the third day, again, this was over the weekend. The 50-day was still dominant, and then Monday things started to separate a little bit. We got a surge in the 21. We started to get about a $15 difference in price, and then obviously Tuesday was a huge day, 5% candle, and we started to see these spread apart, and obviously the rest is history, right? We got the pump, and look where we ran into resistance, right at the 100-day moving average here. And so we knew that if this Golden Cross formed, there was a high probability, not a guarantee, but a high probability that we would see price pump, which has indeed happened. But there's something else in the charts that is concerning. You see these dashed lines here on the daily chart? When I switch to the weekly, you're going to understand what that's all about. Those are extensions I drew off of the 21-week and the 50-week moving averages. And what these signal is a pending death cross. And I've been talking about this for more than a month. Okay. So you have had all the warnings you could possibly have to position yourself for this. And so what's happening here in the charts is really, from a technical perspective, something that, in my opinion, needs to happen. Two things need to happen for us to validate or invalidate the trend. And with some folks in the bear camp and some folks in the bull camp, it's important that this happens in both directions. And so one of them is a test of resistance at the 50-week moving average. We've not had that test since we lost it back in November. And so to either add another validation and confirmation of this bear market, or to invalidate this bear market and have a shot at reclaiming the bull, this needs to be tested. And obviously, if it's reclaimed, then we get to talk about some, well, obviously if it's rejected, then we have a solid, very clear indication of what trend we are in for anybody who's still not convinced that this is a bear market. If we break this level, well, then we get to talk about the possibility of bulls reclaiming the bull market, and then we can entertain the conversation of a potential super cycle. But for that to happen, I've told you there's a few things that need to happen. One is we need to see weekly closes above this 50-week, and of course, with this cross here, the 21 is right there, so that would also be indicative of a bull market is crossing that. And we also need to see weekly closes on the weekly RSI above this 41 range. And we're seeing it price poke above that right now. Okay. In the past couple of days, we have seen this start to rise out from below this level. But it's not what happens midweek that matters. This is the equivalent of a wick on a candle. For me, it needs to be here after the weekly close, and then we need to see another week fully above it, and then we have some confirmation. And then, of course, there is one more level up above here that would absolutely solidify the bulls are back in control, and that would be the 200-day moving average, which is up here around 106K. All of these levels are significant, and I'm going to tell you why. Other than the moving average, we could see potentially. Let's say we do actually reclaim, come up here and test this level, and price starts to move above it. We could conceivably see that develop into a full bull market recovery, but we could also see that develop into a short squeeze that moves up to the 200-day moving average. So all of these areas are in my focus right now. Now, as for that 100K level and the trend line and the timescape levels, these are also important. And they're also showing up in the order book. And so these levels are not random at all. This and you can see when we got this rug pull, we had this volatility, right? But this level at 95K is here in support of the trend line, and you can see we just came down and hit it. And this level at we have a timescape level at 98K that's important. We have resistance at 97K, which is where that 100-day moving average is. And so all of these come into play. 97 was taken out, right? And then we saw it like moving back in to defend, and here it is again, trying to defend that resistance at that 100-day moving average. And then we have a timescape level up here. This is the first weekly open of the year. And as Alex mentioned, what about 100K? Well, for me, 100K is more of a psychological target than it is a technical target because the 50-week moving average is actually here currently at 101.4K. And this is a moving target, right? It's going to change every day. So at the moment, it's above 101. So because there's so much liquidity stacked there, I think that anything in that range is a valid resistance test of the 50-day moving average, right? We may that liquidity that's there now, and there's currently about 25 million holding things down there. That could absolutely block the attempt to get up to that 101 level here, or higher, right? And what about higher? What about that 106 that I talked about? Currently, you see really not much sentiment for that level, but nothing changes sentiment like price. So if we do indeed move above the 100K level, I can bet that we're going to start to see ask liquidity move into place in this range here. And I've heard people mention 103, 104, 107, et cetera, et cetera. It's those technical levels that matter, and we'll see if if liquidity moves into those ranges when we get there. Meanwhile, look at what's happening literally right before our eyes. Let's refresh this. So we had this in terms of the volatility that we've seen in the past couple of hours. We had this rug pull and price dumped. And the selling had already begun before that, right? The selling began here, and kind of cascaded down. Purple whales have really been buying dips and selling rips here, through this range. If we zoom out to a higher time frame, we can see that actually red sharks have really been dominating the order class in terms of volume here. If we switch over to absolute value, we can see that red and those orders, if you scroll down onto the let me get click this out of the way, and then maybe you can see it. Those orders are down here on the key, $10,000 to $100,000 in size, and that order class has done about 145 million in the past week. Excuse me, 289 million in the past week, and purple whales have done 100, well, it's still climbing actually. So in the past week, 297, nearly 300 million out of sharks and 166 million out of purple whales and less than 20 million out of brown mega whales at this point. But the overall obviously is up. Um, and so that's obviously very, very important to watch. And you can see these big surges here. And so, how do you protect yourself? Like I said at the beginning of this, how do you protect yourself? Um, Bakmati, no, this is not a liquid. Well, this is a liquidity map. It's not a liquidation map. Okay, this is not futures. These are not leveraged. This is the spot order book on Binance. We're looking at limit orders resting on the order book, and so um, and we've seen them move around a bit, right? And so knowing what the overreaching analysis is, right, is one way that we protect ourselves. Okay, so if you're a low time frame trader and you're scalping and swing trading in this environment, great opportunities for you here, right? This volatility is your friend until it's not. But but for the most part, this volatility is what you want to see as a low time frame trader. But you know that ultimately it's a matter of time. You know a couple of things. You know, one that we really expect to see a test of resistance up at this level, whether it takes a day, a week, or weeks to develop. We expect that. And so, do you have the patience to ride that? And are you over levered, where the drawdown and the downside volatility is going to liquidate you? So you need to be prepared and protected for that. And number two, if you're monitoring the order book and the order flow data that can give you insight to what's happening, then you're really armed with the knowledge that can help you be more proactive rather than reactive to what's happening in the charts. And so, as I mentioned, we saw this developing. We saw this volatility developing, right? We could see that um, we had some sell pressure happening here. We could see the rug pulls. We could see liquidity stepping down. We could see the rug pulls. And so, what gave us insight that there was going to be a recovery? This incredible amount of volume that came in, specifically and initially from purple whales. And I mean, there was it seemed there was a VWAP going on here. Excuse me, a TWAP strategy going on here. For anybody who doesn't know, that's a time weighted average price. Seemed there was a TWAP strategy going on here. I think when I looked at it last, it was like 40 million in less than an hour. And let's see what it is now. Um, at the time, at the low, that purple class was down about, we'll call it 30 million, negative 30 million, because they had sold, and now up 96 million. So that's nearly, we'll call it 100, we'll call it 125 million, since in the last couple of hours. That's not typical. And it's clear that, at this stage, right, when we were down here and they're buying and this liquidity kept coming into place, it was like, how are they going to get through this? Are they going to eat through this? But they kept on going and kept on going. And knowing that there wasn't hundreds of millions stacked here, it was clear that they were going to get through. Now, here's where I got screwed. I had an order placed here at 95 and it was filled. And the reason you don't see this, by the way, because it was a wick down here to this level. This is a line chart, so the line chart doesn't show that. But there was a wick down to 95, about 95.5, and I got filled there. And when I saw this rug pull, I pulled it. I closed the order really quick for a little below break even. Right, no harm, no foul. But then I started watching this, and I was like, oh shit, they're buying, they're buying, they're buying. They're going to eat through this. So I placed another order to get back in, and then I started focusing on this analysis, and that order didn't get filled. So I've essentially missed this move at this point. So now I'm waiting for another pullback to get it. And hopefully I do. Maybe I won't. Maybe I will. That's okay. I have other positions going, um and in play here. But I was just looking to take a quick swing, hopefully up to that 100 K level at a minimum. And so I'm still looking for that opportunity. Now, in terms of some things that have changed this week, and gosh, man, it's killing me right now that I missed this trade. I'm pissed because I would have been well up right here, right? So think about some other things that came into play this week, some things that we were watching, right? We have been watching and waiting very, very closely for the Clarity Act um, to pass through the Senate, and we've been watching and waiting for the Supreme Court to weigh in on Trump's tariffs. And what has happened to both of those? Well, in classic Trump fashion, they got fucking delayed. You know, so we still don't have clarity on anything other than the fact that I think the market is actually happy that the Clarity Act got delayed because it's not. There's some provisions in there that just are not friendly to uh, crypto investors and consumers, and specifically some things about liquidity, about yield on stable coins that were there to protect banks. And so Coinbase withdrew their support. The bill was withdrawn from markup, and they're essentially going to try and negotiate some things before they go after it again, because I think there was a good chance it wasn't going to pass. And there are some great provisions in that bill too that are going to um, allow banks to come in, and I think that's important. I think that's good for the overall health of crypto, and of course, some regulatory clarity. Very, very good for the overall health of the market. But it's all got to be good, right? So we'll see on that. Nonetheless, I think it is some of the reason we got this acceleration in volatility here this week. Aside from the fact that we had declared the fact that we knew we were going to see volatility between the golden cross on the daily time frame and the death cross on the weekly time frame. So that's what I'm looking at. You have a good sense at this point, if you keep in mind that we are moving up on the golden cross, and if this indeed forms, and there's a high probability that it does, as you can see. It's going to be hard to pull out of this trajectory, maybe not impossible, but difficult to pull out of this trajectory. If this death cross forms, then the outcome is rather predictable. And if you have missed any of my prior analysis, I will show you very, very quickly what that looks like. And I'm going to clean up the chart and take out timescape levels here, just so we're looking at a little bit less noise on the chart. And I'm even going to isolate the two moving averages in question, which would be the green 21 and the red 50. And if you will notice that this is indeed a once per cycle, largely a once per cycle event. And it always comes, I say typically it happens this way. Typically, when we see a death cross between the 21 and the 50, there's downside, big time downside. Um, Typically, how about 100% of the time that happens, there's downside, at least, and you could say, well, it's a relatively small sample. We've only had 4 cycles. So sure, I'll give you that, but I'm not betting against it. I'll tell you that. Just to give you an idea, back in the first, in the first cycle, um, we had death cross here in August of 2011, and that came with 71% of downside. In 2018, 62%. Well, even though this one is an anomaly, this was the COVID crash here. We did have a brief death cross between those two moving averages. And even that one gave us 55, 56%. And then let's go to the next one. Happened here, took us down. We got some help from the FTX crash, but where was it? Here we go. 66%. So these are major corrections. These are bear markets when that happens. Okay. And so there's a lot of, nothing changes sentiment like price. And it's almost comical to see the sentiment flips after a candle like this. Because it is like people change on a dime. But if you zoom out and you look at the overall macro, then you have a good idea. Now, this again could be invalidated if we have a clean break above the 50-week moving average and we start printing weekly candles above this, and then ultimately get candles above the 200-day as well, right? Then you're back in the game. So what I'm looking for between now and then is I also think that there's a really good probability that the path that the price action takes is the path that shakes out the most people. So like the move that we just saw. So everybody's expecting a test around 100K, somewhere between 100K and this 50-week moving average. And I can see that happening. And that the shorts are going to come in heavy here. And that's why I think there's potential for a short squeeze to this level. Now, if we start printing candles above this, then you have to, you have to consider an invalidation of the bear market, and you have to consider the possibility of a super cycle. And so that's what I'm watching. And I hope that's what you're going to watch as well from this. And with that, I'm going to wrap it with one final view. We'll zoom out and look, you can see we now have resistance happening here, but those purple whales are still buying. So let's see what happens. Let's see if they start selling here and taking some profit, because there's an aggressive move happening here, and they have been buying dips and selling rips. So I have a feeling that that's exactly what they're doing here. So we'll watch. Maybe it turns into overall accumulation, and maybe that will be the case, and we'll find that out in months when price, if price is trading above that 200-day moving average. But I think that's a long shot. I think that this is a confirmed bear market until we get some validations that it's not. So again, I wanted to give you a broader view of the order book here. We'll zoom out a little bit and see across different time frames. The heavy liquidity is stacked here in, obviously between 98 and 100K right now. I can make this a little bit easier to see by adjusting some filtering here. But this, where I was optimistic this morning, was because this was fading here and we're getting some strength, some more bid liquidity coming in. At the moment, we now have new asks coming in, or at least strengthening in this range. They're going to make it a little bit tougher. So where I thought we might get that break above the 100-day moving average today, it looks like that's going to be a challenge, right? And that remains challenging. But as long as we see buying continue, then there's an appetite for it. And you're seeing it now from the largest order classes. So keep that in mind. And I hope that helps you trade smarter. Gonna wrap it right there, guys. Have a great rest of the week.